Torex Gold is an intermediate gold producer primarily focused on the Morelos property in Guerrero, Mexico. Torex has undergone a transformation from a single asset producer reliant on open-pit mining into a diversified polymetallic underground operator with significant copper and silver exposure. The Morelos property serves as the geographic and economic center of Torex Gold's operations. Spanning approximately 29,000 hectares within the Guerrero Gold Belt, the complex is located 180 kilometers southwest of Mexico City. The property contains several deposits, including the Limón Guajes ELG Mine Complex and the Media Luna underground deposit, which are now integrated through a centralized processing infrastructure.
Historically, the Limón Guajes complex has been the engine of Torex's cash flow. It comprises 3 open pits, El Limón, Guajes, and El Limón Sur, and the underground mine. The geological setting is defined by a series of granodiorite stocks intruding into marble and limestone formations, creating extensive skarn mineralization along the contacts. The main El Limón intrusion is an elongated peanut-shaped stock, approximately 6 kilometers long by 2.5 kilometers wide, with gold mineralization occurring in association with retrograde altered exoskarn. As of late 2024 and throughout 2025, the El Limón Guajes complex reached a critical transition point. The open pits, which produced over 450,000 ounces in 2023, began a scheduled wind-down, leading to a temporary dip in total production during the transition to underground mining fronts.
However, the El Limón Guajes underground has emerged as a high-performing asset. Initially targeting 2,000 tons per day, the underground mine achieved this rate ahead of schedule in 2024 and continued to scale, reaching an average mining rate of 3,175 TPD in the fourth quarter of 2025. This expansion of the El Limón Guajes underground is vital as it allows for the displacement of lower-grade stockpile material with high-grade run-of-mine feed, thereby protecting margins during the ramp-up of larger projects. The most significant driver of Torex Gold is the Media Luna deposit. Located south of the Balsas River, Media Luna is a large-scale underground skarn deposit containing gold, copper, and silver. The project required an investment of approximately $848 million to $950 million, making it one of the largest mining investments in the history of Guerrero State. Commercial production was declared on May 1, 2025, marking the end of a multi-year capital-intensive build.
The logistical integration of Media Luna with the El Limón Guajes processing plant is achieved via the 7-kilometer Guajes Tunnel. This tunnel houses a high-capacity conveyor system that transports ore from the south side of the river directly to the plant, leveraging existing processing infrastructure to minimize incremental capital costs. The ramp-up of Media Luna has exceeded management's original timelines. In June 2025, mining rates already exceeded 5,300 TPD, and by the fourth quarter of 2025, the rate had reached 7,052 TPD. The company is currently on track to reach its steady-state design capacity of 7,500 TPD by mid-2026, which is approximately 6 months ahead of the schedule originally outlined in the feasibility study. The centralized processing plant at Morelos is a key competitive advantage for Torex. To accommodate the polymetallic ore from Media Luna, the plant underwent significant upgrades, including the installation of copper and iron sulfide flotation circuits and vertical grinding mills. The facility has demonstrated operational efficiency, consistently running above its nameplate capacity of 10,600 TPD, with throughput exceeding 11,000 TPD in several months of 2025. Metallurgical recoveries have also trended ahead of design levels. In the third quarter of 2025, gold recoveries were recorded at 94%, while copper recoveries reached 95%. These high recovery rates are essential for maximizing the value of the polymetallic ore body and directly influence the company's ability to generate cash flow at lower gold equivalent price points.
Torex Gold reached a financial inflection point in 2025. After years of negative free cash flow driven by the Media Luna build, the company pivoted to positive free cash flow in the second half of the year, supported by record metal prices. The third quarter of 2025 Torex generating $113 million in free cash flow. This performance was driven by the sale of 118,082 ounces of gold equivalent at a record average realized gold price of $3,548 per ounce. A feature of Torex's revenue stream is its emerging copper exposure. Starting in 2025, copper represents approximately 20% of the gold equivalent production. All-in sustaining costs for 2025 were guided between $1,400 and $1,600 per ounce of AEQ sold. The actual AISC for Q3 2025 was $1,658 per ounce, reflecting the impact of higher gold prices on royalties and Mexican profit-sharing payments. Despite the absolute increase in costs, the AISC margin remained at 53%. The cost profile is expected to improve in 2026 and 2027 as Media Luna reaches steady-state production. Management anticipates that economies of scale and operational efficiencies will lower unit costs once the 7,500 TPD mining rate is fully realized.
Debt management and liquidity. At the end of Q3 2025, net debt stood at only $48 million. The company repaid $75 million during the quarter and an additional $20 million post-quarter end. Management has explicitly stated its target to repay all remaining debt by the end of Q1 2026. The company also maintains significant liquidity through a $350 million revolving credit facility, which was amended in 2025 to extend its maturity to 2029. This financial flexibility allows Torex to simultaneously fund exploration, repay debt, and return capital to shareholders.
Dividend policy and share buybacks. In late 2025, Torex announced a quarterly dividend of CAD 0.15 per share, representing an annual payout of approximately $40 million USD, representing a 1.1% yield at a CAD 55 share price. This dividend level was chosen to be sustainable across various gold price environments and aligns Torex with its Tier 1 peers. Torex has also been active with repurchases under its NCIB. In 2025, Torex repurchased 825,769 shares at an average price of CAD 57 per share. Management intends to evolve this program in 2026 to be more declarative by specifying a percentage of free cash flow to be allocated to returns, balancing between dividends and buybacks as the balance sheet continues to strengthen.
Valuation. The company's NAV is derived from the net present value, NPV, of its core operating assets, adjusted for corporate costs, debt, and exploration upside. Analysts generally apply a 5% discount rate to precious metals assets in stable jurisdictions, though a slightly higher risk premium may be applied to Mexican assets due to security and regulatory uncertainties. The ELG and Media Luna operations are integrated, and their value is driven by the 11.75-year mine life extending through at least 2033. Production is forecast to average 450,000 to 500,000 ounce AEQ per year through 2030. Using a 5% discount rate and long-term metal price assumptions, which are currently well below spot prices, the combined NPV of the Morelos Complex is estimated to be between $2.2 billion and $2.5 billion.
The EPO Project Expansion. The EPO project is a satellite deposit north of Media Luna that provides a significant leg of organic growth. Following a pre-feasibility study in late 2024, EPO was integrated into the mine plan, with first production expected in late 2026. EPO's high-grade skarn mineralization allows Torex to maintain high production levels as ELG open-pit stockpiles are depleted. The project adds incremental NPV by extending the high-grade production profile of the complex. Los Reyes and regional exploration. The acquisition of the Los Reyes project in Sinaloa, Mexico, for CAD 36 million in 2025 provides Torex with a development stage asset to diversify its production base. A PEA is targeted for mid-2026, which is expected to outline a multi-million-ounce gold and silver resource. Additionally, the company's $45 million exploration budget for 2026 targets high-priority zones like Media Luna East and West, where recent drilling has identified intercepts of 20 meters at 7.24 grams per ton gold. These regional targets are valued as a real option on mine life extension.
Discounted Cash Flow Model, DCF model. A standard DCF model for Torex assumes the following 5-year trajectory based on current guidance and ramp-up. 2026 production, 475,000 ounces AEQ at steady-state 7,500 TPD. Cash costs, improving as economies of scale take effect post-ramp-up. Capital expenditures, materially declining after 2025 as major project spending concludes. Taxation, 30% corporate rate plus 7.5% mining royalty in Mexico. Under these assumptions, the PV of the 5-year cash flows, 2026 to 2030, alone exceeds $1.3 billion at conservative metal prices. When factoring in the terminal value of the Morelos Complex beyond 2030, the model supports a total firm value of approximately $2.7 billion to $3 billion.
Risk assessment. Torex Gold is exposed to several risk factors, primarily stemming from its geographical concentration in Guerrero, Mexico, and the technical challenges of its current operational transition. 1. Jurisdictional and security risks, the Guerrero discount. Torex operates in Guerrero, which is historically one of Mexico's most dangerous states due to the presence of organized crime and cartel activities. Criminal activities targeting the mining sector in Mexico have increased industry-wide operational costs by 10% to 20%, with some cases exceeding 20%. The region has a history of incidents. Historically, the company faced a 6-month-long blockade in 2017-2018, involving rival union interests and reported fatalities among protesters. Security premiums. To manage these risks, Torex must maintain an extensive security infrastructure and community development agreements, or CODACOPs, which add to the complexity and cost of maintaining a social license to operate. 2. Regulatory and policy uncertainty. The Mexican mining sector has undergone fundamental legislative changes that create long-term uncertainty for foreign operators. 2023 mining law reforms. Sweeping reforms passed in May 2023 reduced the duration of mining concessions from 50 to 30 years and eliminated the preferential status of mining, meaning companies no longer have an automatic right to expropriate land for mining purposes. Sheinbaum administration stance. President Claudia Sheinbaum has maintained a restrictive policy, including a moratorium on new mining concessions as of June 2025. While the administration recognizes mining as a strategic sector, it has increased scrutiny on environmental impacts, particularly for any remaining open-pit activities. Resource nationalism. There is an ongoing trend toward domestic control of strategic minerals, which may lead to stricter enforcement of environmental laws and higher operational costs related to tailings and water management.
3. Single asset concentration risk. Unlike larger producers with diversified portfolios, Torex's valuation is almost entirely tied to the Morelos property. Lack of diversification. Any localized event, such as a natural disaster, a large-scale security disruption, or a prolonged labor strike, could result in a total halt of the company's revenue stream. Land access dependency. Continued growth and mine life extension, such as the EPO project and Media Luna East, depend on successful negotiations with local ejidos, communal land groups. The risk of failed negotiations is significant, as seen at the nearby Los Filos mine, where operations were indefinitely suspended in 2025 due to a failure to reach a land access agreement with a single local community.
4. Technical and operational execution risks. The transition to a large-scale underground operation at Media Luna involves inherent technical complexities. Ramp-up challenges. While currently ahead of schedule, achieving the steady-state mining rate of 7,500 tons per day by mid-2026 requires the seamless integration of the 7-kilometer Guajes conveyor tunnel and the successful commissioning of a new paste plant. Metallurgical complexity. Media Luna is a polymetallic deposit. Any variability in the ore body that affects recovery rates for copper and gold equivalent could materially impact the projected cash flow. 5. Financial and macroeconomic sensitivities. Torex's profitability is highly sensitive to external factors beyond management's control. Commodity price volatility. The company's valuation is most sensitive to the price of gold. A change of plus or minus $200 per ounce in the gold price impacts annual operating cash flow by approximately $55 million. Currency fluctuations. Roughly 60% of the company's payments are in Mexican pesos. A strong peso increases the USD-denominated cost of labor and services. A 1 peso change in the MXN-USD exchange rate has an approximate $10 million impact on operating costs. Profit sharing. Mexican law requires companies to share 10% of their taxable profits with employees. High gold prices, while beneficial for revenue, also increase these mandatory payments, which can pressure all-in sustaining cost margins. Growth catalysts. The future of Torex Gold beyond the Media Luna ramp-up is focused on resource expansion and district-level optimization. Drilling at Media Luna West has hinted at the potential to add significant inferred resources by the end of 2025, which could eventually be converted into reserves to backfill the production profile. An inaugural drill program at Media Luna East is also planned for late 2025 following the negotiation of land access agreements. These satellite zones could potentially extend the mine life of the Morelos Complex into the late 2030s. The preliminary economic assessment for Los Reyes, due in mid-2026, will be a key catalyst for demonstrating the company's ability to grow outside of the Morelos district. Furthermore, as Torex becomes debt-free and generates substantial free cash flow, it is positioned to pursue further M&A. Management has stated they are seeking opportunities for diversification, potentially adding a new production hub in a different jurisdiction to further de-risk the corporate profile. In early 2026, Torex is expected to release an updated 5-year production outlook. This update will likely incorporate the accelerated ramp-up of Media Luna and the inclusion of the EPO project. Analysts expect the company to target a production floor of 450,000 to 500,000 AEQ per year through 2030. Conclusion: Torex Gold has shown strong cash flow yield and is positioned to generate significant free cash flow in 2026. Mining rates at Media Luna and throughput at the processing plant are consistently exceeding design capacities, indicating that the asset is capable of producing at the upper end of its guided range. While security risks remain a headwind to achieving a Tier 1 multiple, the fundamental strength of the Morelos Complex and the impending debt-free status might be a catalyst for a market re-rating of the company.